Welcome to China Events, I am Jason. As of early August, the balance of the U.S. national debt has exceeded $32 trillion, reaching $32.65 trillion, since the United States raised the debt ceiling in June of this year, just 2 months after the United States expanded $1.25 trillion of debt. The debt scale continues to swell. However, the U.S. GDP last year totaled $25.46 trillion US dollars. The debt accounted for the proportion of its GDP has been as high as 128%. The U.S. debt snowball is getting bigger and bigger, and some media believe that the U.S. current debt is going out of control. Although the current U.S. fiscal revenue can still support the need to pay interest, but in the long run the U.S. need to pay interest on U.S. debt will be higher and higher, and the U.S. debt is currently issued is not smooth. The market enthusiasm is declining. Moreover, the attitude of overseas investors has not been as firm as before. Reduce the holdings of U.S. debt has become the choice of most investors. In the U.S. $32.65 trillion US dollars in debt, 76% held by U.S. domestic investors. Overseas investors hold U.S. debt accounted for from once 30% down to today's 24%. To dollarization has become a reality. Starting today, the U.S. Treasury will issue $103 billion in debt this week, and the whole 3 quarters need to issue $1 trillion in debt. The largest since last year, $7 billion more than the May offering. Specifically, $42 billion of 3-year U.S. debt was offered on the 8th, $38 billion of 10-year U.S. debt was offered on the 9th, and $23 billion of 30-year U.S. debt was sold on the 10th. The U.S. Treasury's cash reserves in the near exhaustion of the occasion, in order to replenish liquidity, will also increase the issuance of Treasury bonds, which will be a large number of absorption of funds in the financial markets, which caused a tightening of the banking system liquidity. This means that superimposed on the Federal Reserve is still in the case of tapering, the U.S. banking industry and business for the greater trouble may have been brewing, will bring violent shock to the U.S. financial markets and U.S. bonds, as well as further damage to investor trust in the U.S. banking system. The latest data and news are feeding back to this trend. The U.S. Treasury Department data released on August 1 also showed that, as of June 30, the Treasury's cash balance fell to only $30.8 billion, reaching the lowest level in October 2015, which indicates that the U.S. Treasury Department has been in the out of ammunition, dumping money. This indicates that the U.S. Treasury is on the verge of running out of money and losing everything, and is in desperate need of creditors to pick up its massive new debt to keep it in the black. Immediately after, J.P. Morgan expects the Treasury may issue $2 trillion of new debt to balance its spending and repayment of related debt payments. This pumping effect will be for the already shaky U.S. banking industry. Buried hidden dangers, which also further confirms the sudden collapse of the 3 state banks. The U.S. is about to usher in a recession and more bank crashes of the chain of explosions and further damage to the U.S. financial prestige and the status of the dollar. The U.S. Treasury refinanced significantly more than expected in the third quarter, and U.S. bond yields rose above 4.1% as the size of the deficit rose sharply due to excessive U.S. fiscal pressures. U.S. bond yields are expected to remain elevated as short-term supply disturbances remain. Last week, U.S. bonds were sold, and now the U.S. bond tsunami is coming, constituting a major test of investor demand, as well as to determine whether the sell-off will continue. Currently, overseas investors in the 3 countries holding the most U.S. debt are Japan, China, and the United Kingdom. Japan holds U.S. debt is still more than $1 trillion, but compared with the previous $1.3 trillion by more than $200 billion. China currently holds $846.7 billion in U.S. debt, the second largest overseas holder of U.S. treasuries. Since the beginning of the year, China has reduced its holdings of U.S. debt several times, and in the past 10 years, China has accumulated a total of $470 billion in U.S. Treasury bond sales. In May this year, China, Japan, and the United Kingdom once again reduced their holdings of U.S. debt, with China reducing its holdings by $22.2 billion and Japan and the United Kingdom reducing their holdings by tens of billions of dollars. As for the June and July data, we have to wait until the U.S. Treasury Department in the middle of this month and September release. The data there is a 2-month delay. Many people will have a question: why China does not sell all of the US debt, but a slow and sustained reduction in holdings? If all sold, what will happen? Before answering this question, let's understand, why does China hold so much US debt? After all, China is the second largest holder of US debt. From the perspective of trade, China is the world's largest commodity exporter, and the United States is one of the world's largest importers of goods. China and the United States' trade volume in the past 20 years has been to maintain a high rate of growth. China's exports to the United States is very large, but less imported from the United States, so there is a huge trade surplus, resulting in China's foreign exchange reserves ranked first in the world. A large number of huge amounts of dollars, if you do not take to invest, is a great waste. In many countries in the bonds, US bonds in the yield, liquidity in all aspects of good performance, and US bonds have never defaulted, so there have been more than 30 countries hold US Treasury bonds. China is no exception. The final question is, what exactly would happen if China dumped all of its US debt? The first thing to understand is that the $846.7 billion in U.S. debt held by China only accounts for 2.59% of the size of U.S. Treasury bonds, which is not a high proportion. Secondly, if China sells all 800 billion U.S. bonds, can take over 800 billion U.S. bonds of overseas investors or U.S. institutions. At present, no country can take over such a large amount of U.S. debt. Can take over the U.S. domestic investors are also not many. There are not many domestic investors who can take over. Moreover, such a large amount of money selling will inevitably trigger the price of U.S. bonds plummeted, which will also cause great losses to ourselves. When the price of U.S. bonds fell, 100 billion U.S. bonds, maybe only $90 billion in the final transaction price, continue to sell the price of the worse, even if the final all thrown out, may have been the loss of tens of billions of US dollars, or even hundreds of billions of US dollars. In addition, China's breath to sell US bonds will certainly trigger the butterfly effect, resulting in panic selling in the market. After all, China is the world's second largest economy. A huge amount of US debt suddenly liquidation will be triggered by the capital market shocks in the short term. The US economy will cause a huge impact. The US dollar credit system will also face an unprecedented impact. However, the United States will inevitably use a variety of means to save the market. The use of a variety of tools to take over more than 800 billion US debt. The Federal Reserve and other institutions will also make a move to the US strength can be taken over, but will also face a strong impact on the capital market, and at the same time, due to the decline in US debt prices will also be a loss to China. Therefore, a combination of factors to consider. China is unlikely to sell all the US debt. The probability is still to continue to maintain the previous rhythm of gradual sell-off, the overall still to reduce the main holdings. On the other hand, China is also increasing its holdings of gold reserves. China's official gold reserves have been 9 consecutive months of growth. To enhance the security of foreign exchange reserves, to reduce the risk that may arise.